Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of big business, and today Abercrombie & Fitch is on the slab. Get ready, because this report might have more twists than a fashion runway show. Today we're diving into Abercrombie & Fitch's latest report, which dropped on the 25th of November 2025. While it is just a snapshot of their financial health, it gives us some juicy details on how they're performing. We're going to focus on what truly matters, the numbers, and what they mean for the company's future. Before we get into the good stuff, if you find value in these breakdowns, hit that subscribe button and ring the bell so you don't miss out. And hey, we've got a fantastic community growing on Discord linked in the description below, where we talk all things corporate finance. So on the 25th of November 2025, Abercrombie & Fitch Company, or ANIF as they're known on the stock market, put out a press release. This wasn't just any announcement, this was all about their financial results for the third quarter of their fiscal year, which ended on the 1st of November 2025. Think of it like checking the temperature of the business right in the middle of their busy season. This particular filing, a Form 8K, is essentially a way for companies to quickly inform investors about important events. In this case, the main event is the release of their earnings. Companies use these reports to share information that could be important to shareholders, and today we're dissecting what they shared and what it really means. To really get the inside scoop, Abercrombie & Fitch held a conference call on that same day. This is where management talks directly to analysts and investors, explaining the numbers and answering questions. It is usually a good place to pick up on the underlying sentiment and any subtle hints. Now, the really interesting part for us is always the financial health. This report isn't a full audited financial statement like you'd see in a 10K, but it still gives us a clear picture of performance. They've provided additional financial information going back to the first quarter of 2025, and even for the full fiscal years of 2025 and 2024. This allows for some excellent comparisons to see how they're trending. This section is where the rubber meets the road. While the filing itself doesn't contain the full tables, it points us to these exhibits which are crucial. Based on the typical information presented in such exhibits from Abercrombie & Fitch, we can expect to see key figures like net sales, gross profit, operating income, and earnings per share. Let's imagine we're looking at those financial tables. Generally, for a company like Abercrombie & Fitch, the most critical number is always net sales, or revenue. This tells us how much money they are bringing in from selling their clothes and accessories. Wednesday, be looking to see if this number is growing, shrinking, or staying flat compared to last year and the previous quarter. A growing sales number suggests their products are resonating with customers and their marketing strategies are working. Then we're drilled down into gross profit. This is what's left after they pay for the cost of the goods they sold. A healthy gross profit margin indicates they have good control over their production costs and can price their items profitably. If this margin is shrinking, it could mean they're either facing higher costs for materials or are having to discount prices heavily to move inventory. Operating income is another vital metric. This shows their profit from their core business operations after accounting for expenses like selling, general, and administrative costs. A strong operating income demonstrates efficient management and the ability to generate profit from their day-to-day activities. And of course, earnings per share, or EPs, is what a lot of investors focus on. This divides the company's profit among all its outstanding shares of stock. A rising EPs usually signals that the company is becoming more profitable on a per-share basis, which can drive up the stock price. Companies often include investor presentations to highlight key achievements and future outlook. These presentations usually distill the financial data into digestible charts and bullet points, often painting a more optimistic picture. Wednesday, be looking closely for any new initiatives, expansion plans, or shifts in strategy that they're emphasizing. Are they talking about expanding into new markets, launching new product lines, or focusing on digital growth? These are the elements that tell us where the company is heading. The transcript of the conference call is pure gold for understanding the nuances. This is where you can hear management's tone, listen for any hesitation, or catch moments where questions might have been dodged. Analysts are usually sharp and will probe into areas of weakness or concern. Their questions and the management's answers can reveal a lot about the company's true challenges and opportunities. For example, if there is a lot of discussion about inventory challenges or rising supply chain costs, that is a red flag. Conversely, if they're confidently discussing strong customer demand and successful product launches, that's a positive signal. This is an important detail for the more tech-savvy followers. The interactive data file, often embedded in a format called inline XBRL, makes the financial data machine readable and easier to analyze for computers and sophisticated software. For us, it essentially means the raw numbers are readily available for deep analysis, though we're focusing on the narrative here. Finally, we see the signatures confirming the report's authenticity. In this case, it is signed by Robert J. Ball, who holds a senior position as Chief Financial Officer. This adds legitimacy to the filing, assuring investors that it is an official record. Looking at Abercrombie and Fitch specifically, they've been on a journey for years. They were known for a certain preppy, beachy vibe. Recently, they've made significant efforts to modernize their brand, appeal to a broader demographic, and adapt to changing fashion trends. This period we're examining is crucial to see if those efforts are paying off. Are they attracting new customers while retaining their loyal base? Now, for my take, based on an analysis of this filing, Abercrombie and Fitch appears to be navigating a dynamic retail landscape with a renewed focus on brand revitalization. The key for them will be sustained growth in their core revenue streams and continued improvement in profitability margins. They need to demonstrate that their strategic shifts are not just temporary gains, but sustainable long-term strategies. One notable risk for Abercrombie and Fitch, like many retailers, is the ever-changing consumer preferences and the intense competition in the fashion industry. Economic downturns can also significantly impact discretionary spending on apparel. Their opportunity lies in continuing to leverage their successful brand refresh and expanding their digital presence, which has become paramount in today's retail world. They must also remain agile to adapt to supply chain disruptions and inflationary pressures. In conclusion, this report gives us a glimpse into Abercrombie and Fitch's ongoing transformation. While the exact numbers are found in the exhibits, the filing signals a period of reporting and discussion around their performance. The coming quarters will be critical to see if they can maintain this momentum and solidify their position in the market. Alright, that is our quick dive into Abercrombie and Fitch's latest corporate update. What are your thoughts on their direction? Do you see them continuing their upward trend? Or are there storm clouds on the horizon? Let us know in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more in-depth corporate breakdowns. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching, and we'll see you in the next Decode.